let's talk about that whole thing about wealth in the first place, right? Because wealth is such a loaded word. It's almost misleading to some extent because one man's version of wealth is not the same as another,
Mhm.
and somebody that grew up with no assets and no money whatsoever, and they've worked hard and they've made sacrifices and they've made smart choices and they've managed to save 100 or two or $300,000. That's wealthy. I mean, that is wealthy when they look back at where they came from. When I look at where I am today compared to where I was when I, growing up in foster care, I'm rich as all get out. But you know what? I'm not Warren Buffett. I'm not Bill Gates. I don't have hundreds of millions or billions of dollars. And so wealth is all relative to where you are in your own personal life. So don't be intimidated when you hear that word wealth. Wealth means that you have assets that are important to you, that you've made choices to accumulate money, that you've made
Mhm.
choices to accumulate wealth. And now you need to make the decision, do you want to take steps to protect it and preserve it? Do you want to take steps to distribute it efficiently while you're alive for income? And do you want to take steps to protect it from not only the market, but also the tax bill that you're going to be encountering if you're not careful? So as we talk about wealth, let's remember that when you hear that word, you don't have to think about it as life insurance and your eyes roll back in your head and say, oh, that's not me, I'm not wealthy. Look at where you came from. Look how hard you worked to get where you are. And then think about the money that you have in account right now. If you lost that money, would it bother you? Would it hurt you to lose 20 to 50% of it? If you worked hard for your money, you are wealthy. So do not make the mistake that wealth only means I have $1 million or 5 million or 10 million or 20 million or whatever that number happens to be. Wealth means that you've accumulated a nest egg that you worked hard for, and you deserve to protect it and have it work in its best manner for you.
There was an article in Business Insider that we talked about earlier that cited wealthy people do these three things consistently to stay wealthy. Number one is have a financial plan and stick to it. No brainer. Number two, they have over planned for retirement. That's always a good thing. And then number three, and we're going to underscore this, they found ways to reduce taxes. You are a business owner. Myself, Ryan, we're all business owners, and we talk to a lot of business owners out there. Let's talk about them. Let's focus on them for a minute, because we normally hear, oh, I've got a 401k, I've got a pension, and then I've worked for somebody. But really, the unsung heroes here are the ones that create those jobs. They build something successful. They want to sell it. But Mike and Ryan, they don't want to just be, hammered by this massive tax bill.
And, just as a quick aside, I know we're going to focus a little bit on taxes, but, you talked about business owners and 401ks, and I'm not sure people are aware, but Maryland actually has a rule now, and it's been around for a couple of years. Maryland actually requires all employers that have more than 5 employees, you have to offer them a retirement plan. You have to offer them minimally an IRA or a 401k or a SEP or a SIMPLE or something. You have to offer them a plan that you can make contributions to and the employee can make contributions to. Now, fortunately for us in Maryland, there's not a fine for it. The flip side to it is that all of us as business owners with Maryland entities, we have to fill out those personal property tax returns every year, where they charge us a fee to file them, and then they want to charge us a tax for whatever stuff we have in our office. You actually get a discount on that side. So be aware, as a business owner, be aware that you now have an obligation to provide your employees that retirement plan. But more importantly, and kind of more on target for what we're talking about, is that whole idea of having a tax plan. A business owner has a plan to grow his business. A business owner has a plan to maintain his business over the years. A businessman had a plan on how to start his business. A businessman has a plan on how he wants to transition it to the next generation or sell it off or whatever he's going to do next. He's thought those things through. Sometimes he's written them down. Sometimes he examines them every day. But what most business people fail to do, and I really can't blame it on business people. I think it's our industry problem, that the CPAs, the enrolled agents, the people, the bookkeepers, the people doing the taxes for all these business owners. And business owners, you own a business, real estate, you have rental properties, all in the same category. You have some accountant CPA doing books, and they're wonderful historians. They tell wonderful stories about what happened in the past, but they spend absolutely no time or little to no time explaining on what you can do to save taxes going forward. So we frequently have business owners come in and they've done a great job. They're going to sell their business for 100,000. They're going to sell their business for 1 million. They're going to sell their business for 10 million, 30 million, whatever the number is. They have this huge profit, and what their CPA has told them is to just cut a check for $350,000, as Ryan likes to tell that story. And they're working with two different financial advisors, and one says, okay, we're going to cut a check. We're going to cover the check for the federal. And the other advisor says, we're going to cut a check for the state, and all your taxes will be paid. And Ryan and I are horrified because, one, they wrote all those checks and didn't take advantage of the tax write-off related to those checks. But two, they sold their business and didn't talk to us ahead of time, because we could have paid as little as zero taxes on that transaction had we structured it correctly. They came to us too late. I can't fix a tax problem after you've already encountered, or after you've already done the tax problem. If you've already sold your business, I can't fix it after the fact. But if you're thinking about selling your business and you're going to make a profit, and you have an option to either A, lose 20, 30% between federal and state, or B, not paying any taxes on that transaction. Maybe you pay some tax when you actually use the money. But if you want that option, if you want to truly understand that you have flexibility and your CPA didn't tell you about it, I mean, if you said to your CPA, I'm selling my business, and they said, okay, we'll calculate the tax when you're ready. If that's the story you're getting from your tax people, you have the wrong advice givers. Give us a call at 866-597-1040, 866-597-1040. Sit down with Ryan, myself, and our team, and we're going to show you how to create income streams, risk, taxes, estate planning, long-term care, all that stuff. But we will show you how to structure your transaction for the sale of your real estate, for the sale of your business, heck, for the sale of your highly appreciated stocks. We can show you how to structure that deal in such a fashion that you could pay as little as zero taxes. If we structure it correctly, zero taxes for the rest of your life. Now think about that. Imagine having a sale of a $10 or $20 million asset and paying zero taxes on that for the rest of your life. That's not a bad way to go through retirement. Zero taxes. Give us a call.